My name is Tony Crawford, and I am pleased to present a review of my research of Professor John Chant's Canadian Government 2009 ABCP Crisis in Canada report for a doctoral degree. Part 1 analyzes the monetization of toxic loans through taxation systems behind the largest bankruptcy of a financial conduit in Canadian history. As an author, I was inspired by the greatest leader of the New Democratic Party, my friend, the Honourable Jack Layton. I wrote Identity Theft Protection in 2007 when he signed Petition 44 for an investigation into predatory lending practices in financial markets. I hope he enjoyed my dark humour in Contaging that I launched in the federal election in dedication to his pursuit of fairness and social responsibility that Jack Layton instilled in the hearts of all Canadians. It was timely and effective, and I am extremely saddened of his passing. Your truth is contaging. Thank you, Jack. Part 2 analyzes so-called naked CDS that complicates ABCP reconciliation reviewed in Part 1. How do tax auditors reconcile tax credit savers' personal assets used twice over for bank loan-dependent ABCP, whereby unwitting makers consign the same personal assets to holders as insurance to pay out mortgages sold as investments geared to default? The issue of financial engineering secondary risk is prefaced in the following BBC and CHTV news reports.
Recently on Business Daily, we reported on the growing concern about whether complex financial products called synthetic exchange-traded funds could spark off a crisis like subprime investments did in 2008. I spoke to one of the most influential economists in the world, Harvard economist Professor Andrei Schleifer.
Financial innovation, which led to people taking on a lot of risks that they didn't appreciate or didn't understand, with the result that after these risks materialized or after bad events have occurred, these people were in substantial amounts of trouble.
Thousands of Canadians are actively planning for their retirements. That's a good thing. But what happens when you sink your savings into an investment only to find a bank is calling you saying you owe them money, lots of money? Well, that's what happened to our next guest. Tony Crawford is the author of The Perfect Sting. And he joins us in studio, as does Robert Beers, a financial planner and tax consultant who has seen more than his share of people who unwittingly became sitting ducks for the big banks. Tony, could you very quickly tell us what happened to you?
Yes, I guess it started in 1989 when my accountant came with some advice to put some money into an investment for a tax-saving opportunity. And what I wasn't aware was that there was a bank loan involved with this as a secondary risk. 10 years later, the bank came to me and told me that I owed them about $100,000 based on the fact that I had signed up for an investment that was supposed to have some payback and ownership in property.
And you had no idea at all. This hit you like a ton of bricks.
Absolutely no idea. This was a total surprise to me. And when the bank called me about this, they showed me documents that I had signed, and indeed I had signed a contract, but the investment promoter had taken my signature to a bank with a signature affidavit that I wanted to borrow money, and the money went into the investment product.
Robert, how many times have you heard stories like Tony's before?
Well, far too many, unfortunately, but well over 200 to 300 a year.
What happens? Are these legitimate investors that come up and just have some sort of a scam, or I mean, who are these people?
Well, they're called the promoter, and in order to sell the security, because that's what they're selling, they're not selling real property, they're selling a security in the syndication deal, they've got to be paid, and quite often they will use a bank to assist them in the process of being paid.
Tell us, what steps did you take when you found out you owed all this money? And it was a lot of money, was it?
It was a lot of money, and it wasn't just once. My wife was in a similar scheme for $40,000.
Wow.
And that was totally unknown to us until the bank told me about my debt.
But what did you do?
Well, I obviously had to respond to the claim, and as the information came to me, I realized that there were third parties involved in this that I could make a counterclaim against, and that involved the accountant, that involved the actual promoter of the product, and of course the bank. And in the course of discussion, they told me that I was a sitting duck and that I would have to pay regardless, that the bank is perfectly entitled to reclaim the money simply because of the way the documentations are put together.
Now, this was all legal. What they did was legal. Is that correct?
I understand that everything is legal, and I have tried every angle, which has given me an opportunity to have emotional highs and emotional lows of incredible proportion. Sometimes I think I'm onto something, but I understand that the Canadian law is really in conflict with the ethics the banks promote they have. They don't have to have business ethics because the law says that whatever they do is going to be okay, and in this case they did far more than they should have.
Hey, guess what? It's not going to end until you pay what you owe.
The research study of signature-specific identity theft, undisclosed, unsigned investment loans behind secondary ABCP risk includes court testimony to validate Professor Chan's ABCP Crisis in Canada business model.
This is the process for offsite closing.
Which is something that you gave to Allied Canadian.
Correct.
Through an authorization.
That's right.
The rent that pays the Allied mortgage is the heart of the business model.
Clearly it's your investment. You bought the units, right? You have a liability related to those now. You borrowed from the bank. You obviously have a liability with the bank. The terms and conditions of a loan are not awareness of debt. You meet terms and conditions of loans before you get the debt. So it's one comes before the other. And to meet terms and conditions, the bank has to get the documentation. Then you meet the terms and conditions, right?
Is the acknowledgement and agreement contains the loan terms?
Yeah, the form that you signed. You signed a whole bunch of documents. You didn't know what you were signing. That's your problem. It's your problem you don't read what you signed.
It does refer to agents in there too.
Those are the waivers.
I noticed that that since there's indications that you're not relying on officers or employees of Bank of Montreal to advise as to the merits, you formed an independent judgment. They consider this language, waiver language, also saying that you're not going to saying that they're independent of any, these loan agreements are independent of any agreements you have with Allied Canadian. Loan, evidenced by promising
Personal loan.
service application.
So what I can tell you is what's here doesn't matter. We don't get into the kind of due diligence that you're referring to because we're not project lenders. We're lending to you based on your credit. You can go blow your brains out. That's fine. We lend to you on your credit worthiness. On the merits of the investment, we don't look at it. Is it a good investment or not? That's not our expertise. It's what was inputted into CCAPs that matters. Well, the bank computer is actually the credit decisioning machine. So what's inputted into the computer is what's important, not what's on the piece of paper.
You signed all bank documents on the same day. You signed a blank promissory note to the bank. And the fact is that the purpose of this was meant to try to get some verification that they were getting your signature on the note. They did get your signature on the note. So, to confirm that it was to try to get some confirmation that it was your authentic, genuine signature on the note, which is, I believe...
And this is the process for offsite closings. You would have a liability related to the investment as well. It depends on the structure of the deal. All I'm saying is when you buy an investment, and some of these projects, the borrower, in our case, the investor, may have a liability related to the investment over and above the loan. If that's the case, the bank would include that in the debt servicing calculation. I never saw any evidence of that. May have been.
Promissory note was signed and not dated. We know that. It says right on it. It's Allied Canadian Limited Partnership 89-2 signs this promissory note to Allied Canadian Properties Corporation. So it has nothing to do with the bank.
It's not signed to the bank.
Yeah. No, you signed a note directly to the bank. You signed a note directly to the bank.
We don't know anything about it. You could sign 1 million of those. I wouldn't know.
I didn't witness it. He witnessed Mr. Paris' signature. Mr. Paris swears an affidavit, and Mr. Emery commissions the affidavit. That's not witnessing your signature. Paris says he witnessed your signature, and here is a copy of it. Emery commissions it. After Bank of Montreal sent you the letter saying, this is how much loans for, this is what the interest rate, this is what the payments are, and you send in 12 both-dated checks, each would have been deposited into that account, and then gone to pay the loan. Yeah, there's no account number, that's correct.
This is a bank account. I'm assuming it's for your funding account for your loan payments. It's not the loan at all. I mean, if you look at what it says here, it says, I agree to the terms and conditions as shown on the reverse of the following and acknowledge receipt of the Better Banking Guide, personal deposit services. That relates to bank accounts, not loans at all. I don't know for sure, is that I believe the bank probably would have cut an official check to pay for the investment from the loan proceeds. But there's no circle of funds going through some secret account.
The scheme sets up personal bank loan receivables with mortgage terms and conditions for a concealed mortgage paid from rent claimed as losses for tax credits transacted through financial conduits. Cash flows in the BMO personal credit financial conduit starts with requests for payments that investors subsequently report as Allied Mortgage Partnership interest charges for personal income tax credits. Cash flow in the Allied Tax Credit Financial Conduit is ABCP interest collected while rental income pays the mortgage interest reported as personal expenses for income tax credits that monetize pre-planned losses as government expenditures. BMO renews investors' loan-dependent ABCP each year, and the tax flows continue with annual requests for thrifty people to save tax credits until the benefit ends with the Allied mortgage in default. The reacquire trait of Allied investments is when the mortgage holder, as debtor in possession (DIP), takes their property back from investors who, as insurers signing naked CDS, owe the mortgage principal due to tax-deductible investors' notes as the key feature of the scheme. After Allied takes back investor notes to clear the mortgage in the disposition of property with final disbursements to investors, the underwriting bank issues notices to collect undisclosed, unsigned loans, evidenced by 10-year-old photocopied demand notes that despite audit collateral deficiency notifications about amounts being altered with doubtful initials and the RCMP citing potentially criminal acts, and although none of the notes are witnessed, BMO litigates to win summary judgments for court orders to collect. In my own case study example, a judge ruled no genuine issue for trial on June 27, 2008 from an abbreviated factum handed to the bench to replace my factum for defense and counterclaim against Allied, noted in default to defend, and accountants who were never examined or appeared in court in the case of BMO suing 10 years to collect a potentially fraudulent note. On January 30, 2009, the Court of Appeal for Ontario endorsed a BMO memo dated December 1, 1989, without pleadings from BMO or testimony from counterclaim respondents who did not appear in the 15-minute hearing, that there was no risk associated with documentation and as such will not pressure the promoter or the client to sign new documents. The court documents in question are Allied notes somehow rubber-stamped, filled out with accreditation amounts, changed and initialed, and dated December 1, 1989, to evidence personal loans to close BMO $10 million off-site loans closings paid to Allied by the end of the same business day.
Well, that's not a bank promissory note.
I'm sorry, and this promissory note in the bank's documents that we're relying on
isn't witnessed either.
Correct.
This doctoral research paper is public information to illustrate and discuss the reconciliation problem of signature-specific identity theft, trick loan-dependent, mortgage derivative, naked credit default swap, non-bank notes that in Canada is only potentially criminal. In the RCMP file, Mr. Paris witnessed my signature on a first blank BMO note and my wife's on a second. BMO will not clear paid writs on judgment for the first note unless my wife releases the bank and Mr. Paris from her lawsuit that the bank denied litigating in a hearing to collect the first. My wife and I would like authorities to answer a question from the research of some 300 tax savers in debt to about $22 million due to BMO investment loans. How could I have prevented her debts for my part in the largest $32 billion bankruptcy of a financial conduit in Canadian history? I believe my research endorses Professor Chant's study that, quote, with disclosure, investors would be better able to recognize flawed investments such as ABCP as dangerous to their financial health. The same applies to sovereign debt, and I recommend legislation to prohibit both creating and trading naked CDS to regain stability in financial markets. I propose government authorities test banking regulations with a reverse onus rule perspective that lenders must prove financial due diligence and identity validation before transacting loans to collect. Please add your signature to Canadian NDP Leaders Petition 44 for consumer and taxpayer protection, and feel free to critique my draft doctoral dissertation in public debate on World Wide Web, petition44.com and g20rule.com.